London is, by any measure, the largest venue in Europe. So our key competition is with the US. And there's a lot, if you look at the listings that have already happened in London, you take Wise, for example, which is in a similar sector. It's actually had an incredibly successful listing in London and is trading at a 50% premium to its US listed peers. So the idea that you always get an enhanced premium in the US is a misnomer. The other thing I always say is that a listing is for life, not just for Christmas. And one of the reasons that matters is that access to follow-on capital, rather than just the IPO, is the critical part of being a listed company. And actually, relatively in London this year, we've fallen by less than in other jurisdictions. And that continuing valuation matters. And if you take the UK companies that have gone to the US that are over 100 million over the last 10 years, there are 22 of them, 5 of them have delisted, and only 3 of them are trading up. And one of those is Manchester United, and we know why. I'm a Man U fan, so I know why. So the simple reality is it isn't just the headline sticker. It's what happens in the life of a company afterwards on any venue that matters. And we care passionately about making sure companies have the right access to IPO, but also that they get the continuing access to follow-on capital as well.
So what is this a brand perception then, effectively? Is this companies going, well, look, we get the big premiums in the US, it's more known for tech, we're not even going to consider London. Does it come down to that then?
I don't think we're not going to consider London is true at all. And I think there is a habit of fixating on the companies that don't come and then not reporting the ones that do come. I think that does happen. We have a slightly British habit of standing back and admiring the problem and not being in a position to recognise how much progress has been made. We had a spectacular year in 2021 for tech and fintech. We had a slow year last year. We've had a less slow year comparatively to others this year. Things are picking up again, and we've got the biggest listing in Europe and the third biggest listing in Europe either happening or announced already. So actually I think there's far more going on that's positive in the UK. We are also going through a radical period of reform in the UK, which will enable us to have a completely level playing field versus any jurisdiction.
Is this, you mentioned there, I think, the FCA's consultation on some of the listing reforms as well.
Yeah.
Do you think this is the silver bullet?
There is no one silver bullet, and I've been public about saying so. You need to have the right listing rules, you need to have the right research capabilities, you need to have a strong, deep pool of domestic equity investment as well, and you need a host of the rest of the ecosystem. The UK has the world's leading global financial market. It starts more brilliant startups and creates more unicorns than any country outside of the US, China and India, and it has a deep and liquid pool of capital markets. One of the things we haven't always done is connect those as well together, and that's one of the jobs that we're seeking to do now. The listing rules play a very critical role in that. Merging the standard and premium together, I think, is an inspired idea. The FCA have come up with a really good set of proposals that mean that capital can be raised by companies that are not only traditional fixed asset companies that throw off steady flows of cash, but also fintech and more IP-based companies that have a more pre-rev status and are moving towards the future revenue streams. That is the thing that we didn't have in our listing rules before. That's the thing that we will have after these reforms, and I think it's very positive.